Right, good day learners. In this video clip I'm going to do question 30 with you, focusing on the fixed asset note. Now this is a very important note and something that you're going to do right through grade 11 and 12. So let's get it sorted out right from the outset. If we have a look at the note, and this is a note that accompanies the balance sheet or the statement of financial position for a business. And what we have to do, we have to give information about our assets, which in this case is 3 separate assets. The starting point is what is the value at the beginning of the year. And that will be what was its original cost, using the historical cost, what did it cost you, and how much accumulated depreciation. In other words, how much depreciation, the total depreciation, has already been written off that asset by the beginning of the year in previous years. And remember that your carrying value is always your cost minus your accumulated depreciation. So carrying value is a calculated figure. It's not found on any ledger accounts. You'll find these two figures there. Then your movements is what has happened during the course of the year. And in grade 10, you will look at additions. It's when you purchase or get given another asset. And you'll look at depreciation. How much is the depreciation for this year? You can ignore disposal until we get to grade 11. And then, if that was the situation at the beginning, this is what's happened during the year. What is the value at the end of the year? What is the cost and what is the accumulated depreciation? So we are given in our information, first thing you need to do is see that you're given 20.8 and 20.9. So 20.8 will be your beginning of the year figures and 20.9 will be the end of the year figures. So let's start by looking at the land and buildings. And we'll see that at the beginning of the year we had a cost figure of 7320. So my land and buildings 7320,000. Now our land and buildings are not depreciated. If you look in the information, you'll see no accumulated depreciation on land and buildings. We keep them at the historical cost, and that's because generally they increase in value. And so your carrying value at the beginning will be the 732000. Right, cost minus no depreciation. And then under the information, we are told that our land and buildings by the end of the year have gone to 8,200,000. So that will be the cost figure again, as well as the carrying value or the book value, because there is no depreciation. And now you have to stop and say to yourself, well, why did it go from there to there? And that is obviously because it has increased. You can see it's got increased. You have acquired extra land and buildings. We're not sure whether we bought them or were given them, but the difference between these two figures gives us an addition of 880,000. Now let's look at our vehicles. First of all, we weren't given the cost at the beginning of the year. Remember when they write just vehicles, that's the cost value. But we are given the end of the year figure, so we can fill that in. The accumulated depreciation, we're given the beginning of the year figure, but we're not given the end of the year figure. So we can fill in those two figures, the cost at the end of the year and accumulated depreciation at the beginning of the year. And because it gets subtracted, it must be shown in the brackets. And then it goes on and says to you that 2 vehicles were purchased during the year. One on the 30th of November for 800,000 and the other on the 28th of February, which is the last day of the year on which we are working, for 900,000. So our additions, the extra vehicle, in this case we've got 2 of them, and so our additions will be 1,700,000, the 2 of them separate. In the general ledger you would have had separate entries, but this is the note showing the summary for the year. Now your vehicles at the beginning of the year were not given to you, but at cost we know nothing, but we know that at cost we bought 1.7, and that means by the end of the year we've got 4.7. So the first thing you can do is go and work out the cost at the beginning. something plus 1.7 gives you 4.7, and so you can work back and get 3 million rand. Right, take note how figures are given to you which you have to slot in, and as soon as you slot in, you can then see how you can find the missing figures. In other words, just take it step by step when you get an exercise like this and fill in what you've got, and slowly you'll see how the missing figures come about. Now we've now got the cost at the beginning, we've got the accumulated depreciation, the brackets are telling me I have to subtract, so if I subtract these two, my book value at the beginning was 1,312,500. Right, then we are told that depreciation is 25% on diminishing balance. Now remember, diminishing balance. I did a video link with you on the difference between the diminishing and the cost price. The diminishing balance is the book value. Right, so now if we go back to here, what you've got to watch very carefully is that you had an asset at the beginning of the year. You had a vehicle. And the diminished balance of that was 1,312,500. Diminished balance, the book value, the cost minus accumulated. And then we bought two new vehicles. First of all, we bought one for 800,000, and then we bought another one for 900,000. Now all of these are depreciated by 25%. That is the diminished balance. Now these two are new, so they've never been depreciated before. So for the first year round, the cost and the book value will be the same. So it's 25%, all 25%, but you must watch how long you've had it. Now this one you've had for the whole year. And how do I know that? Because I was given the information at the beginning, and it's still part of this final figure. There was nothing to tell me that I've sold it, and you don't deal with sale until you get to grade 11 anyway. So this one I've had for the whole year. So that one times 25%, that asset has to be depreciated by 328,125. The asset for 800,000, they told you, was bought on the 30th of November. Now remember your timeline. We're working from March to February. Now the reason why I know it's to February, because your exercise told you that we had to do the note on the 28th of February. We bought this asset on the 30th of November. So November's finished. You've had it for December, January, February. You've had it for 3 months. And so when you come to work out this, it's going to be for 3 months. So work out 800,000 times 25%, divide by 12, times by 3, and your depreciation comes to 50,000. Now the last asset here, the 900,000, was bought on the 28th of February. And because it was bought on the last day of the year, we don't depreciate it. At school level, you will only work with months, so you don't worry about that you've had it maybe for 1 day. You have not had it for a month, and so therefore there's no depreciation on that. And so my total depreciation on my vehicles will be these two together, which if I add up comes to 378,125. So you can fill in 378,125. Now I want you to take note how I've shown the workings here, and that's what we encourage you to do, because there's going to be quite a lot of marks allocated to this figure. If you get it right, that's fine, there's no problem. But if you did something wrong, just say you got the wrong months, then your final answer is going to be wrong. But by showing your workings, you can get some of your marks. And you owe it to yourself to ensure that you show all your workings. Now depreciation also reduces assets, so we minus it. And so to finish up, my accumulated depreciation at the beginning, we've now written off more depreciation this year, so we add on. And so by the end of the year, 2065625 will be the total. And my carrying value, cost minus accumulated depreciation, 2634,375. And now just stop. I want you to check yourself. On your calculus, go back to the carrying value at the beginning, 1312500. Add on what has happened during the year. You've bought 1.7 million. But you wrote off depreciation, so minus the 378,125, and check that you get the carrying value. If you start with the carrying value, you end with the carrying value. If you start with the cost, you work on the cost figures and you end with the cost. If you start with the accumulated depreciation, you work with depreciation and you end with accumulated. Now that's a very important lesson to remember, particularly when you move into grade 11 and 12, to be able to double check yourself all the time. Right, if we look at equipment, first of all, you're given the cost figure at the end of the year, and you're given the accumulated at the end of the year. So that will go in at the end of the year, and you'll be able to work out your carrying value by subtracting the two from each other. You were then told that more equipment was purchased for 200,000 on the 1st of September. So you can just go straight in and fill in the 200,000. Now, we don't know what the cost was at the beginning. We had a certain amount. We bought another 200,000 and we've got 2 million at the end. So you can work backwards. 2 million minus 200,000, and your cost would have been 1.8 million at the beginning. Right, your depreciation is 20% on cost. Now the cost method is always the easier one. First of all, you've just calculated this 1.8 million, which we've for 20%, and I've had that for the whole year, so 12 months out of the 12 months, and that gives me 360,000. I then bought another 200,000. Still got to be depreciated by 20, and I bought it on the 1st of September. So I've had it for this period of time. So from the 1st, I had it on the September. So September, October, November, December, January, February. I've had it for 6 months. So that gives me 20,000. And your total depreciation, 380,000. And so you can slot in that 380,000. Now, on a similar vein as the cost, you need to work out the accumulated at the beginning of the year. So it was something. There was extra depreciation of 380, and you've got 780 at the end. So it would have been 400,000. Negative 400,000, negative 380,000 gives you negative 780. And your book value at the beginning, subtract the two figures from each other, your cost minus your accumulated, 1.4. And then double check yourself. 1.4, what has happened during the year? Add on 200,000, minus the 380, and that gives you your carrying value. Your brackets are very important. You stand a chance of not getting them marked in the exams if you don't put brackets in. But more importantly, if you don't put brackets on, you're going to forget to subtract, and you're going to go wrong with your calculations. So concentrate not just on the figures, but on also putting in your brackets. Now keep practicing these fixed assets notes because they are very important for you. Good luck.